Thank you, Amanda. Well, here's the pretty picture. Yeah. Let's take a quick look back at what's happened this past year with the 2014 crop. Won't spend a whole lot of time on that. I think most of you probably through contracting and then already popping the cotton, maybe mostly done. But if you're not, then let me know. We'll try to spend some time on kind of what to do from here out. But what I wanted you to see in this chart, if you look back to as late as last May, we were over 80 cents. Since that time, we've lost about 25% or more in terms of the price. If you look back now, most of you probably say, well, when it was over 80 cents, I wish I'd done more. I contracted X number of bales, and kind of looking back at it now, I wish I'd done a little bit more. You know, suppose cotton had gone to $1 instead of going to 59 cents, what would you have said? You know, I wish I hadn't done anything at that point. I mean, there's always a coulda, shoulda, woulda, and there's not a whole lot of use in going back and kind of beating yourself up and, you know, thinking that you could have done better or whatever. One of the things that the very fortunate thing that we've had, and I'll discuss this during lunch if you're with us when we do the quality awards, fiber quality has really been important to us this year. There's been a good demand for cotton from the U.S., especially good quality U.S. cotton. The markets are out there. It's unfortunate it takes 59 cents to move it, but the quality, there's been a demand for quality U.S. cotton. The quality premiums have been very good. The basis has been very strong. You take a strong basis, you take 3 or 4 cents on quality if you had good color, staple, strength, and then you add anywhere from a 3, 4, 5, almost 6 cent pop payment on top of that. You can turn a 59 cent market into something close to 70 pretty quick. That doesn't solve the problem, but it makes us feel a little bit better. But one of the things I want you to see is that we had 4 times here where the market kind of took a hit, and then it moved sideways for a while, then it'd take another hit and come down. Anytime you see the market move sideways like this, the best way I can explain it is, when you see that, that means the market's fairly happy where it's at. There's not too many people, I mean, there's a balance. Whenever you see the market move kind of sideways like this, there's kind of a balance between people that want to see prices move lower and people that want to see prices move higher. The market's in equilibrium, what we like to call. But the market's kind of in a happy place at that point. In terms of, I'm not going to go over those numbers. In terms of what's kind of moving the market right now, and I think these are also, and that's why I bring them up, these are things that are very important as we kind of look ahead to the 2015 crop. If you're going to plant cotton, these are the things that are really going to impact where this market goes. In my mind, the worst case scenario that we'll have on the 2015 crop is that we have a repeat of what we had this year. In which case, we're down around 60 cents, but hopefully with your good quality and a good basis like we had again this year, and with the pop or LDP, hopefully that's going to turn into something in the mid to upper 60s, close to 70 cents like it did this year. So if you plan on growing cotton, remember you're not growing it for 60 cents. Okay? That's important. Just because the market's at 60 cents, that's not the whole story. Think about your quality. Think about the strong basis we had this year. Think about the fact that if prices do get down that low again, we're going to have an LDP or pop payment again, and that'll help you out. You may still decide to cut back on cotton. I imagine a lot of you will. But just remember, you're not growing for a 60-cent market. That's not the total picture. You got to consider your fiber quality, your basis, and your LDP or pop if we get there. These are some things that are important. I particularly want to kind of focus in on a couple of these. Look at the first one up here. I think we do have some potential for better crops. I've heard some other people talk, and they're pretty negative, and I understand that. I'm a little more optimistic, but I think you have to look at what's in play out there. Number one, our exports have been very good, but look at the price of cotton. Cotton's 59 cents. Of course, exports should be good. If prices are going to improve a little bit as we get on into 2015, let's suppose this market goes from 59 or 60 up to 65, 68, 70. Let's suppose we move there. Who's going to buy cotton at that price? Will somebody buy cotton at that price? If so, the market will move there, and the market can sustain itself there. The market can't sustain itself anywhere where there aren't willing buyers and sellers. So if we move up in price, and I think there's some chances that we will this summer, can we sell cotton at that price? That's an important thing. We still have a lot of concern about stocks and economic growth and about what's going on in China. What's happening in China has been part of the reason why prices have come down. We all knew prices would eventually take a hit because we're sitting here with record stocks. I told y'all before last year and the year before, as we were building stocks, that eventually we're going to have to pay the piper. The fact that China was buying a lot of cotton and building stocks helped us for several years. But now that they sit there with it, prices are going to be impacted by what they do with all that. It's like if they sit there and hold on to it, fine. That's what's happened the last few years. But when they start moving it in the pipeline and start getting it into their mills, then that's one less bale. That's more bales that they don't need from us. The other thing about what's going on in China, as I've told y'all before, and you may have read, they have instituted two new policies over there. One's a target price policy, similar to what we have had before, that growers in their main cotton producing region will receive a payment for the difference between where the domestic internal price of cotton is over there and the target price. We don't know how that works. We don't know when or how that's going to be instituted, but it kind of hangs over the market. My belief is that we will cut back in acreage here in the U.S. We'll cut back in acreage. We'll have lower production. As I'm also going to show you, one of the factors that we assume is that world production will be down. Well, really, we don't know. Because it could be that target price program, if it's instituted in China, may help to hold their acreage more constant. So it's not at all clear what's going to happen globally. We can more easily look at the U.S. and talk about acreage and what we might produce, but it's much more cloudy and uncertain when you look across globally. The other thing, kind of recent news, is that India is now the world's largest producer of cotton. They have surpassed China. They also hold a lot of stocks, not nearly as much as China does, but they've been slowly building stocks, and this kind of hadn't been in the news. We hadn't heard a whole lot about it. But India's kind of been building stocks too, and they recently announced that they're going to begin selling those stocks. Why you'd wait for the price of cotton to get below 60 cents and then decide, hey, guess what? We're going to start selling our stocks at 60 cents. So that's another thing and the reason that's important is because India is now the largest producer, and They also historically have supplied cotton to China when we have not. They're a big customer. China buys a lot of India cotton. So the fact that they've been building stocks a little bit, and the fact that they have announced that they may, we don't know the details, but the fact that they've announced that they may now start selling some of those stocks is a concern. Why? Because they're competition for us in the world market, particularly in sales to China. So all these things are kind of in the background. All right, let me move through some of this. Let me make one comment here in the sake of time. This is a look at what the POP or LDP or marketing loan gain has looked like. We go back to first week back in October and kind of run up through 6.41 cents now, currently through the close of business tomorrow. You see this thing goes up or down. We started out back last fall, back last October, around 2.5, 3 cents, went up to almost 6 cents, came back down, and now we're going back up. Why is this LDP up or down? What do you think? What moves this thing up or down? All right, world market. When the world price of cotton moves down like it is now, that POP or LDP is going to grow. It's going to increase. We go from here to here. When the world price of cotton increases, it's a little stronger, that LDP or POP is going to reduce. Our prices, the prices you see, maybe not every day, but over the course of a week and several weeks, the prices that you see on the New York cotton futures. Right now, if your buyers are pricing cotton off the March futures, those prices that you see on March futures, and thus the price that you get quoted for your cotton, moves in relationship to that world price. They don't move necessarily penny for penny all the time, but they tend to kind of track together. So let's back up. If the LDP went from here to here, what happened? What prices do? Prices increased. I mean, prices went down, right? If we have an increase in LDP or POP from here to here, that means prices went down. So when you go from here to here, you got an increase in your POP or LDP, but you're also getting less for your cotton because prices went down. So it's not clear that you're necessarily making more money just because the LDP goes up. Now, I know that's kind of all confusing, and I'm not going to go through all this other stuff for the sake of time, but I want to give you some tricks on how you play that game. What you have to do, that LDP is announced. That LDP runs from Friday, for example, when it changes, it'll start Friday this week and run through Thursday next week. It runs from Friday to Thursday. So that LDP or whatever will be fixed for a week. All right. Once that LDP or POP is announced, it's going to be good through the close of business the following Thursday. All right, so it's not going anywhere. The LDP's fixed. Now you watch the market during the week. If the market starts to go up during the week, that could be a signal that you need to go ahead and pop the cotton and sell it. Why? Because if you don't, the market's going up, so what's going to happen to the LDP the next week? It's going to go down. So you have to catch it when this relationship is in your favor. I know this is getting confusing. I'm kind of confusing myself. But you have to catch it when that relationship moves in your favor. If the price of cotton is declining during the week, then you know the LDP the following week should be more. So hold on. Wait till the market starts to move up while the LDP is fixed. And you have to pop the cotton and sell it. Or if you've got cotton in the loan, you have to pay off the loan, redeem your cotton, or you have to take a merchant equity. You have to do those things while the market's moving up, while the price is fixed, while the LDP is fixed. All right, let's talk about next year. This is the last price I saw yesterday. This was actually about 10 or 11 o'clock last night, and the markets move after hours, so this might have been an after hours price. It may not have been yesterday's close, but I had a little over 62 on the new crop futures. Now, why am I a little more optimistic than most folks? It has to do with this, and I'll explain to you what we're looking at here. Starting back in 2010, we had we've had 5 consecutive years where globally we have produced more cotton than we needed. Okay? We produced more cotton than we needed. When that happens, we start building stock. We didn't just wake up with 100 million bales of cotton stocks out there. China didn't just wake up with 60-something million bales of that. It happened because we had 5 consecutive years of overproduction that allowed that to happen. But you can see that our production is starting to trend down. We can also see that our use of cotton in mills worldwide has started to recover. Our demand, our use of cotton took a tremendous hit back when we were at $1, $1.50, $2 cotton briefly there for a while. Mills, and as a matter of fact, the use of cotton, you can see we're not even nearly where we were back in 2007, and if you go back a little bit further, you see the number up there closer to 130. Think about how much market share we have lost. We've gone from say 130 million bale market share to barely now around over 110. The fact that we've lost demand is one of the big reasons. You can't just look at production alone. You have to consider the demand side. The fact that we lost so much demand is another reason why we have burdensome stock. But you never hear that side of the story. But our demand has started to improve. If we can continue to trend up a little bit in our demand, and if U.S. and world production, and that's a big if U.S. and world production continues to trend down, we may actually break this cycle of overproduction this year. And we may entirely close this gap. If that happens, then I submit to you, I think we're nearer the low end of the market. And the chance of prices going lower are much less than the chances of prices going higher. Does that mean we're going to have 80 cents? I didn't say that. Don't march out of here and say, Don said 80 cents. What I'm saying is, if our production goes down and our use continues to improve, it should provide some support for prices. And it should limit the further possible down movement in price. And it should give us some opportunity to improve. If our acreage is down, if demand continues to be good, if we get on into spring and summer and we hit another drought or we have some problems here or elsewhere around the world, that could spike prices a little bit. So that's the more optimistic side of this, okay? Now the thing you're going to have to do, and I'll kind of close with this. The thing you're going to have to do is be patient. If you're going to grow cotton this year, you You have to understand and be willing. You may have to wait till this summer before you pull the trigger on anything. I don't see any incentive for y'all to do anything until this market gets to 70 cents. Why? Because your worst case scenario is we're going to be back where we were this year. If the basis is good, the premiums are good, we're going to have LDPs and pops again. The total money you're going to get is somewhere in the upper 60s anyway, so I don't see any incentive of doing anything until this market gets to around 70. But having said that, realize you may have to be patient and wait till this summer for that opportunity. Okay. Let me stop there. We've got a few minutes. I know on your program when they talked about what was going to be discussed in here, they talked a little bit about the Farm Bill. I'm not going to say anything specific about the Farm Bill, but I will if you have questions, or if there's something that you have a question about that you want me or Amanda to talk to you about or to answer. We'll be more than happy to do that. The first decision, I mean, you've got base and yields decisions that have to be made by the end of next month. Those are landowner decisions, not producer decisions. Landowners have to make those, unless the producer's been given power of attorney. And then you have to decide by, help me out, end of March. End of March, I think you have to decide either PLC or ARC, and that's by crop, by farm. So we've done lots of Farm Bill meetings and had excellent attendance, and so we've been trying our best to get that word out there. Y'all, is there any specific questions that I could try to help answer with regard to any Farm Bill issues while we're here?
Are there any websites where we can go and put our numbers in and make comparisons?
Yes. If you'll contact your county agent. All our county agents have been trained on the Texas A&M decision aid.
Okay.
And now they can't run every farm in the county, and they're not experts on it. None of us are experts on it. But they have been trained enough to know how to help you enter your data and how to help you look at the options. They can't tell you what to do. FSA is not going to tell you what to do. But they have been trained on the decision aids and can help you get the data on that. So check. Anybody else? Yes, sir.
Is there something on the UGA cotton page that links you to how you can track the LDPs for cotton?
No, but I can.
Through Georgia Cotton Commission, that's what I do.
But I can give you. Is Chris in here? I saw Chris earlier. I didn't see. The Cotton Commission's page might have that. If you'll give me your name and your email address and all, there is a website you can go to. There's a USDA cotton market ag marketing service website out of Memphis that and also the National Cotton Council on their page tracks it. So and that's a great question. I appreciate you bringing that up, because you can track. For example, I told y'all that the LDP or POP goes from Friday through the close of business the following Thursday. You can actually day by day go online and see how it's moving. So you will know by Wednesday whether that thing is going to be up or down for the week based on where the prices have been each day. So I can give you those websites if you'll just give me your email, name, and email stuff. I'll send it.
Isn't there a website that actually predicts the next weeks as you go through, that will actually predict what the next one will be?
That's exactly what I'm talking about. Yeah, because it'll show you the changes every day starting on Friday, and by the time you get to Tuesday, Wednesday, Thursday morning, or whatever, you'll be able to see. Okay, based on what I see, here's how it's going to change. Yeah. Any other quick question? All righty. Appreciate y'all showing up.